Welcome to Tossie Advisory Group's Stock Investing 101 for Beginners 2025. Dive into the world of stock investing with our Amazon books, tailored for those who are new to investing or feel financially constrained. Explore our accompanying website for more resources and start your journey towards financial literacy today. In this lesson, we will explore the fundamentals of investing. We'll delve into various investment types like stocks, mutual funds, and bonds, assess the risks associated with each, and understand when it's wise to invest. We'll also learn how to research companies and align investments with our financial goals. Our unit objectives focus on understanding the basics of growing wealth, identifying and protecting ourselves from financial scams, and recognizing the importance of not falling victim to these scams. Let's equip ourselves with the knowledge to safeguard our financial future. Welcome to Unit 2.1, where we introduce the concept of investing. This 18-week course will guide you through the essentials, setting a strong foundation for your financial education. Let's start with key terminology. What is a stock? Understanding stocks is crucial as they represent ownership in a company and are a fundamental component of investing. A stock is essentially a share or percentage of ownership in a company, granting you partial ownership of its assets and profits. This is the cornerstone of investing, offering potential growth and income. Next, we explore dividends. What is a dividend? It's the distribution of a portion of a company's profits to its shareholders, typically paid quarterly, providing a steady income stream. A dividend is the distribution of some of a company's profits, usually paid quarterly. It's a way for companies to reward shareholders and share their success. What is a preferred stock? These stockholders have a higher claim to dividends than common stockholders, though they usually lack voting rights. Preferred stocks offer a different investment dynamic compared to common stocks. Let's discuss ticker symbols. A ticker symbol is a unique 1 to 5 letter code used by stock exchanges to identify a company. It's essential for tracking and trading stocks. A ticker symbol is a unique code used by stock exchanges to identify a company. This code is crucial for investors to track and trade stocks efficiently. Up next, we delve deeper into understanding stocks. This foundational knowledge is vital for anyone looking to invest in the stock market. Challenge yourself with questions like, why do people choose to invest their money? Understanding the motivations behind investing can help you make informed decisions. Before investing, consider what you need to know about the stock market or any investment type. This reflection is crucial for making wise investment choices. What is risk? How is investing different from gambling? These questions are pivotal in understanding the nature of investing and ensuring you approach it wisely. What are your financial goals, and how do you intend to achieve them? Setting clear objectives is essential for successful investing and financial planning. Why do people invest in the stock market? Exploring the reasons behind stock investments can provide insights into its benefits and potential returns. As we conclude this chapter, your homework is to review the introduction to investing. This will reinforce your understanding and prepare you for the next unit. Unit 2.2 will guide you through understanding how the stock market works. This knowledge is crucial for navigating the complexities of stock trading and investment. Let's begin by exploring the concept of a stock exchange. A stock exchange is a marketplace where securities, such as stocks and ETFs, are bought and sold. The New York Stock Exchange, or NYSE, is the largest stock exchange in the world, serving as a hub for global financial activity. Next, we delve into the concept of inflation. Inflation refers to the increase in prices and the subsequent fall in the purchasing value of money. It's a crucial economic indicator that affects everything from the cost of living to interest rates. To measure inflation, economists use the Consumer Price Index, or CPI. This index involves setting a basket of goods and comparing their prices over time, providing a clear picture of how inflation impacts the economy. Another key economic term is GDP, or Gross Domestic Product. GDP represents the total value of goods produced and services provided in a country during 1 year, offering insight into the economic health and growth of a nation. Up next, we will explore the New York Stock Exchange in more detail. We'll define what a stock is, examine the role of brokerage firms, and understand what it means to be a publicly traded company. Additionally, we'll discuss why companies choose to go public. We'll also challenge ourselves to describe the difference between inflation and deflation, enhancing our understanding of these critical economic concepts. For homework, dive into Investing 101, focusing on how the stock market works and why it works. You'll also learn how to make your first trade and play the budget game, setting the foundation for your financial journey. In Unit 2.3, we'll cover how to research stocks, equipping you with the skills to make informed investment decisions. Let's explore stock quotes, which provide essential information about a particular stock at a given time. This includes the company name, ticker symbol, price, days high and low prices, and trading volume. Finally, we'll define the bid-ask price, which indicates how much buyers and sellers are willing to pay for a stock. The bid price is the highest price a buyer is willing to pay, while the ask price is the lowest price a seller is willing to accept. Understanding dividend yield is crucial for evaluating investment opportunities. Dividend yield represents the annual dividend payments as a percentage of the stock's current price, offering insight into the income potential of an investment. Next, we'll explore how to obtain and interpret stock quotes, a vital skill for any investor. Researching a company before investing is essential to understand its financial health and market position, reducing investment risks. Evaluating a stock involves checking its financial performance, market trends, and potential for growth to ensure a wise investment decision. Conducting your own research empowers you with knowledge, helping you make informed investment choices and avoid potential pitfalls. Aligning your financial goals with your investment strategy ensures that your stock choices contribute to your overall financial success. Exploring competitors provides a broader perspective on the industry, helping you identify the best investment opportunities. For more insights and guidance on stock investing, check out Tossie Advisory Group's resources and books available on Amazon.